Questions on strategy and financials. Question 1. As stated in the CEO's review of operations on page 39, BERNAS' share of local paddy market declined by 2.7% from 33.3% recorded in the previous year to 30.6%. What are the board's plans on recapturing the lost market and increasing its market share? Our direct market share for paddy is 30.6%, while our indirect market share via the rice joint venture partners is 17.5%. Therefore, in aggregate, the BERNAS Group has 48.1% market share, which is not far from our corporate target of 50% market share by 2015. We believe that with our continued focus on program Rakan Ladang to improve yields, we are on point to meet our target. PRL is a strategic pact between BERNAS, government agencies and farmers to promote greater efficiency in the supply chain and to enhance productivity and crop quality. PRL educates farmers on good agriculture practices, environmental protection and management techniques, introduces the latest agriculture technologies, and provides interest-free financing assistance of up to 100% to cover planting costs. With this program in place, we are confident that the outlook for better market share is positive. Question 2. As mentioned in the chairman's statement on page 32, BERNAS was endorsed by the Sarawak State Government as the anchor company to develop the Entry Point Project 11 in Batang Lupa, identified under the National Key Economic Area for the agriculture sector. A pilot project involving 77 hectares of land in Batang Lupa, Sri Aman, celebrated its inaugural harvest of 3.8 metric tons per hectare on 17 February 2013. Question A. Please elaborate on the plan and how significant is this project to BERNAS in the long run? And B. Would the project be a new beginning for BERNAS to generate a higher revenue contribution from East Malaysia in the future? What is BERNAS' current and expected market share in East Malaysia? Our involvement in this EPP 11 is to support the government's implementation of the policy to increase the self-sufficiency level of local rice and to enhance rural economy and income. As this is an entry point project and a pilot project at that, it is not expected to have a significant impact on our market share and profitability in the short term. Question 3. Does BERNAS plan to grow its non-rice segment further to increase its contribution to the group? Please share with shareholders the group's plans on this segment. As a matter of fact, yes, we are planning to increase the contribution of our non-rice segment. BERNAS has strategically planned to reduce reliance on concession business by increasing our rice retail market share, consolidating our rice JV partner business, and improving profit margins. We are also diversifying into rice and food-related businesses and investing in rice production assets in rice exporting countries to ensure security of supply, consistency of quality, and to hedge against price volatility. Question 4. We noted that the contribution of associated companies has been on a declining trend since 3 years ago. What were the reasons, and is the board expecting a turnaround performance from associate companies in financial year 2013? The decline in the share of profits from associated companies is largely due to reduced contribution by Gardenia Bakeries KL Sdn Bhd, in which we have a 30% share, attributed it to stiff market competition and higher raw material and operating costs. The board believes that Gardenia Bakeries will take the necessary steps to remedy this and that they are in a position to mitigate the decline of its profitability. Question 5. What is BERNAS' current milling capacity? Is a significant improvement in rice recovery output and paddy stock continuing? Please provide data. The current milling capacity of BERNAS is up to 500,000 metric tons per year. To answer your question, yes, we will continue to improve our rice recovery output and minimize paddy stock loss. Moving forward, our rice recovery output target is 61%, with minimal stock loss, but that is subject to the quality of paddy received. Question on corporate governance. The MSWG is promoting standards of corporate governance best practices in public listed companies. In this regard, we hope the board would give due consideration to address the following issue. In accordance to Recommendation 3.3 of the Malaysian Code on Corporate Governance 2012, the board must make a recommendation and provide strong justification to the shareholders in a general meeting if it so decides to retain an independent director who has served for a cumulative period of 9 years. As we do not see such justification and resolution proposed in respect of such director, the board ought to explain to shareholders the non-adherence of MCCG 2012. Yang Berhormat Datuk Abdul Rahman bin Datuk Haji Dahlan, a director who has served more than 9 years on the board of BERNAS, has resigned from the board following his appointment as the Minister of Urban Wellbeing, Housing and Local Government effective 5th of June 2013. As such, the justification and resolution proposed in respect of such director is no longer relevant. Thank you MSWG for your questions and the shareholders for your attention.